Hey everyone, welcome back to Corporate Decoder, the place where we sift through the boring business filings so you don't have to. Today we're diving into a report from Tivic Health Systems. It's a bit like a roller coaster ride full of ups and downs, but hopefully ending on a high note. We'll see if they managed to pull off a financial trick that kept them afloat. So, what's the story here? Tivic Health, a company you might not have heard of, was in danger of being kicked off the Nasdaq stock exchange. And the price of their stock had fallen below the required minimum. They had to convince Nasdaq that they deserved to stay listed. Did they succeed? Let's find out. This report is called an 8K, which is basically a quick update company's file to announce important news. The date of the report is April 4, 2025, so this is pretty recent information. The most important thing is that Nasdaq, the stock exchange, confirmed that Tivic Health is meeting the minimum price requirements. This is a big deal, so we need to understand what this means. The company had received a warning from Nasdaq because its stock price was too low. To stay on the exchange, Tivic needed to get its stock price back up above $1 per share. It's like a game where you have to stay above a certain line to keep playing. They initially failed to do that and were at risk of being suspended from trading. Back in June of the previous year, Nasdaq sent Tivic a letter saying they weren't meeting the minimum bid price rule. Think of it as getting a failing grade on a test. They had a chance to fix it, but by December they still hadn't improved enough and faced possible delisting, which is like getting expelled. Tivic asked for a hearing, which is like going to the principal's office to plead your case. After this hearing, in March of the current year, they got a bit of a reprieve or a second chance. The stock exchange said that if they completed a reverse stock split, they could stay on the market. A reverse stock split is when a company reduces the total number of shares but increases the price of each remaining share. Imagine you have 10 slices of pizza, each worth $1. If you do a reverse split, you might end up with 5 slices, but each slice is now worth $2. The total value is the same, but the price per slice looks higher. The company implemented a reverse stock split in early March. Then comes the good news. In April, Nasdaq sent another letter confirming that Tivic had met the minimum bid price requirement based on the reverse split. This means they get to stay on the Nasdaq capital market. It's like passing the final exam and graduating. The company also issued a press release to let everyone know. These press releases are often a company's way of putting a positive spin on the news, so it sounds as good as possible. So, what's our take on all of this? Tivic Health was in a tough spot facing potential delisting. They managed to avoid it by doing a reverse stock split, which isn't always the best solution. It artificially inflates the stock price, but it doesn't necessarily mean the company's doing better overall. One thing to consider is why the stock price was so low in the first place. Is the company struggling to sell its products? Are they losing money? These are important questions to ask. The good news is that they get to stay on the stock market, which gives them more time to turn things around, but they need to focus on improving their business, not just manipulating their stock price. This situation also highlights the risks of investing in smaller companies. Their stock prices can be more volatile, meaning they can go up and down more dramatically. It's important to do your research and understand the risks before investing in any company, especially smaller ones. Ultimately, Tivic Health's future depends on whether they can grow their business and become profitable. The reverse stock split was a temporary fix. Now they need to prove that they can deliver long-term value to their shareholders. Thanks for watching. If you found this breakdown helpful, please like, comment, and subscribe for more corporate deep dives. Let me know in the comments if there are any companies that you want us to decode next time.